Tressel, and I want to welcome you to Armanino McKenna's webinar, Business Valuations, Best Practices and Recent Developments. First of all, I'd like to review for you how to use your webinar pane. You'll see the pane in front of you. Please note that the orange arrow will allow you to minimize or maximize the pane. If it is minimized, simply click on the orange arrow to bring it back. Feel free to submit any questions that you have for our presenters throughout the duration of the webinar. Our presenters will handle those questions at the end of the webinar as time permits. Next, I'd like to go over your audio settings. If you are using your telephone to listen in on our webinar, please make sure you select Use Telephone. If you are listening through your computer's speakers, please select Use Mic and Speakers. If you have the incorrect settings selected, it will produce an echo sound. Finally, this is very important to note. To qualify for California continuing education, you must use a personal computer, no PDAs, and log in with your own information and unique URL. You need to be logged into our online software for at least 50 consecutive minutes within the scheduled time frame of this webinar. Please actively respond to at least 75% of the polling questions and complete the evaluation survey at the end of the webinar. And I would like everyone to know that we will send out a link to the recorded webinar at the completion of the day or tomorrow, so you will get an email with that information. Now I'd like to introduce to you our presenters. First we have Dirk Van Dyke, Managing Director in our Valuations practice. He holds an ASA in Business Valuation. He earned his undergraduate degree in economics at the Johns Hopkins University and his Master of Science in Business Administration from UC Berkeley. Dirk focuses solely on valuations and has over 17 years of experience working in Silicon Valley valuing technology companies. His major practice areas include tech company common stock valuations for option pricing for IRS Code Section 409A and FASB ASC 718, formerly 123R. He also conducts purchase price allocation valuations, FASB ASC 805, and goodwill impairment testings for FASB 142. Finally, Dirk conducts valuations for M&A purposes, including shareholder buyouts. Jeff Stegner is our practice leader and partner with the Valuation and Litigation Services Group. He graduated in 1988 from San Francisco State University with a degree in accounting and joined KPMG's San Francisco office. Jeff obtained his CPA license in 1991 and joined Armanino McKenna in 1994. He has over 20 years of experience in public accounting, the last 10 of which have been focused on valuation and litigation services. He currently holds 2 valuation certifications and is qualified as an expert in most courts in the San Francisco Bay Area. Jeff has been retained as an expert in over 500 litigation matters in his career. And with that, I'm going to turn the webinar over to Jeff Stegner.
Thank you very much, Mary, and thank you all for joining us today. We're going to start off this morning by covering the learning objectives. During today's webinar, you participants will learn to recognize the issues that auditors raise when reviewing valuations based on our own experiences as well as those of other business valuation professionals as we hear them discuss auditor questions at the various training sessions we go to throughout the country. We're going to highlight some of the statistics, actually a lot of statistics, on the venture capital market and activities in recent quarters in the past year from the various databases that we subscribe to, and as well as our own experience in working with companies in the VC market. So I think we have a pretty good sense of the overall market conditions. We're going to discuss the use of the Monte Carlo simulation method in valuations. This is an area that's getting increasing attention from auditors as well as companies. We'll talk about that in detail. I will not be doing that. Dirk will be covering that. We are not going to identity. We're going to identify the 2012 deadline that's approaching in the $5 million gift tax exemption and some of the issues revolving around that, some of the uncertainty and who could be benefit most by this exemption and what the implications are if things aren't done very quickly related to this. So we've broken our presentation into generally 4 topics, and we're going to alternate between myself and Dirk. starting off with Dirk, actually. Topic 1, we're going to cover issues from auditors on valuation reviews. Given the increased scrutiny from the SEC, there is much greater pressure on audit teams and valuation professionals to identify and critique key assumptions in building out the valuation models. As Dirk and I can both attest, whenever we issue a valuation report for financial reporting purposes and get on the conference call to discuss our findings with our brethren in the Big Four accounting firms, Dirk and I will get on with a client, and then 6 other people get on and start talking about valuation issues, and they have their 75-page checklist to go over the various issues related to financial reporting valuations. Some of the key areas they talk about are we're going to cover today: management forecasts. They're drawing increased scrutiny because they're built almost entirely on management assumptions. They're just going to cover areas that should be addressed more, the key areas that are being critiqued by the audit teams. The company discount rate, one of the most highly disputed areas in valuation period in any situation because of the dramatic effect it has on value. Common stock transactions as of time of financing. What this means is transactions that occur outside of financing, and Dirk will cover that a little bit more in detail. Topic 2 is one I'm going to cover, venture capital markets and activities. I'm going to be covering the results of 2011 and so far this year in 2012, as reported to us from the databases we subscribe to and based on our own experience with the companies that we work with. We have we're going to discuss the IPO and M&A activity as well as the funding, and you'll see there's kind of a difference between a reversal of trends between funding and activity. And we're going to break it down I'll break it down by industry. Some areas are hotter than other areas, and we'll cover the ones that are the hottest as well as ones that are experiencing a little bit of trouble. Topic 3 is the Monte Carlo simulation evaluations, the latest method that